Welcome to the week ahead for the week starting Monday, the 19th of January. And of course, there's a huge amount swirling around within financial markets at the moment. Strong TSMC numbers giving a boost to AI names. Of course, at the same time, people wondering about the longevity of Trump's tariffs. We've, of course, got everything that's happening in Iran, Greenland, Venezuela now. Feels like it's a thing of the past, and that wasn't very long ago. And certainly the moves that we've been seeing within the commodities space also have been dramatic, to say the least, and quite where that comes to an end, no one knows. But we have a raft of economic data points to get through for the week ahead, and also an appearance from the Bank of Japan to make sure that we have at least one rate decision to look forward to. So a busy week ahead, both on the calendar and away from it. And so let's look into that week ahead for the week starting Monday, the 19th of January. Kicking off, as we always do, with a look at some of the big ticket items according to Trading Economics. And they really start on Monday with a raft of Chinese data points. This comes off the back of some bumper trade figures that some people have questioned, but certainly points towards the Chinese successfully having transitioned away from their reliance on the US, with apparently we've seen a 20% decline on exports to the US, but that we've seen a major rise in terms of exports to other nations around the world, or other continents around the world. So there'll be a significant amount of interest around that. Then we get into some of the inflation data. So inflation out of Canada Monday, inflation out of the UK Wednesday, inflation in the US in terms of core PCE on Thursday, and then on Friday, I believe, we've got the Japanese inflation rate. So a big theme around inflation for the week. Alongside that, we've got the jobs report out of the UK. We've got the Bank of Japan interest rate decision on Friday. Oh, no, there's the inflation rate. So the back end. So really late on Thursday night for Japanese inflation. And then retail sales out of the UK. So a big theme around the UK with jobs, inflation, and retail sales. A theme around the US in particular with the release of that GDP figure that's final, but also the sort of catching up of the core PC inflation data. And then Japan, of course, inflation coming out late on Thursday, and then that sort of proceeds a few hours later, the BOJ interest rate decision. So let's kick off with the US. As you can see here, we've got the ADP weekly figure that, of course, sort of loses some of its importance as we start to get more regular sort of headline numbers in terms of the payrolls and the like, but that disappointed, as did the headline ADP figure. And do you know what? More data is welcome to me. Then in terms of Thursday, we've got really that core PC price index figure that I think is going to be the most interesting. We've also got likes of personal income and personal spending, which should sort of shed a light at a time where, of course, we've got a big focus on the weakness of the jobs numbers. But you have to question whether the US economy is doing poorly, or is this a transition into people perhaps hiring less because they are replacing those jobs with AI? And quite frankly, that could be a norm, right? What is the future sort of standard when it comes to the unemployment rate? Who knows? Who knows? Doesn't mean the businesses are faring poorly. Then businesses might be seeing record profits, but at the same time, they're shedding jobs and taking on computers to do the jobs potentially even better. And then we've got the PMIs coming out on Friday. In terms of inflation, now, of course, what's difficult here is that when we're sort of calculating things from a sort of wider perspective, we generally look at those monthly metrics. And by and large, this time around, we're seeing this massive gap in the data, and you can see that for the CPI numbers, October, November, missing on that chart. But we do see a sort of catch up here with the core PC figures. So I'm going to be keeping a close eye out on the monthlies in particular to sort of fill in the gaps. What you can see here is on the left hand side of this chart, we've got those pretty hefty figures for January in particular, and then in February for the core PCE metric. And so that really points towards some different disinflation coming into play at the beginning of this year. But of course, there's a lag between the month and when it's actually released. So in the next few months, it does signal the possibility of some disinflation coming into play for headline CPI and for the core PCE price index, as you can see here, 2.8% the current rate. So we're in the sort of elevated twos. I think there's a good chance we get towards the sort of mid to low twos in the not too distant future. And if we do, that really does provide the basis for the Fed to ease further. However, more recently, of course, we've got this assault on the Fed from the likes of the DOJ, but essentially it's Donald Trump, and Jerome Powell has pushed back. I've just seen some other headlines from other members of the Fed saying the same kind of thing. This is an attack on the independence of the Fed. And some have been essentially seeing this as grounds for them to think that the Fed are going to be even more hawkish, because essentially to cut rates now is just following what Donald Trump tells you to do, and it's undermining the independence of the Fed. At the same time, of course, you've got this hearing for Lisa Cook that I believe might be in the next week. And, her case is essentially, this is all politicized, whereas their case is, oh, well, it's got nothing to do with us wanting to get someone in that's going to cut rates. This is all about the fact that she's committed mortgage fraud, right? Which is funny, really, because now you're trying to push out Jay Powell as well. So that makes it more likely that she stays in the role, and that makes it more likely that the construct of the committee isn't exactly what Trump wants, which is full of doves that are, quite frankly, just going to follow exactly what he wants. And what he wants is, he said it before, 1% in terms of the Fed funds rate. Well, you can see here at the moment we're in the mid threes, and in terms of the market expectations, we're going to get down towards sort of 3 to 325. So a couple more cuts, and that's it, according to markets. That may or may not be the case, because quite frankly, once we get down to that level, really it depends on the position of the economy, because bear in mind, they're taking it down to this level and potentially sort of flatlining at that point, because they want to sort of hold fire and give themselves some ammunition if things turn sour. If they do turn sour by that point, then of course they're going to continue to cut rates. And the weakness we're seeing in the jobs market at the moment would point towards the potential need for them to ease further. Key to that, of course, is the fact that inflation is the other side of the story. And the fact that inflation, according to latest CPI numbers, appears to be under control means there's likely to be a greater focus on what's happening in terms of the jobs market. However, we have this core PCE price index figure coming out this week. So that is the Fed's favored metric when it comes to inflation. So keep a close eye on that. If we see weakness in terms of inflation, that points towards the potential for the Fed to be able to act. It provides the basis for an environment where we could possibly see strength in terms of gold. And of course, gold doesn't seemingly need too much of a push to be able to move higher. That alongside its compatriot silver, which in actual fact has been really grabbing the headlines, because we've seen some incredible moves coming into play. But let's just jump onto gold and look at this from a sort of wider perspective. First and foremost, you can see very clearly the trend is absolutely beautiful. So it's been working out perfectly so far. I mean, you can look at just year to date, right, and see, we've just been rallying up. I mean, silver, to be fair, the numbers are going to be much more impressive. So we're up 6% odd. It's only been a couple of weeks, which is pretty hefty when it comes to something like gold, but certainly silver, you're seeing that kind of move in a day. There is, of course, the prospect of a potential pullback at some point. And certainly with the headlines we've been seeing around Trump, that apparently he doesn't want to hit Iran, that points towards some of the sort of geopolitical risk coming out of the price, which sort of has heated things up a little bit of late. But nonetheless, I see this as a bullish trend. If you see a breakdown through this support level that we have here, there we go. So 40, sorry, my eyes aren't working, 45.69. So if we break through that level, then you're looking at a retracement of that move, right? So then you'll be looking at your sort of fibs and alike. And then, if every once in a while, so you see the sort of short-term move and then the break into the wider retracement. So that would be the retracement of that. But you do have the potential for a wider retracement here. But ultimately, I don't think that's necessarily going to come to fruition. Short-term downside comes into this kind of area potentially before we push higher once again, in my mind. We need to start breaking through some of these key support levels, just sort of 4,400, 42.75, for me to start thinking we're going to see some sort of wider protracted move lower for gold. I just think there's so many drivers behind this. And, I think, if we see news in terms of weak inflation and we see a more dovish outlook from the Federal Reserve, that provides a boost. But if we didn't see that, I don't necessarily see it as the basis for a major sell-off, because much of the buying pressure has been taking place on a central bank basis. So it's not necessarily just driven by sort of retail traders that are thinking, oh, great, we're going to see an additional rate cut, therefore everyone buys. This is a much more sort of strategic thing that's happening at the moment. Alongside silver, we're seeing major stockpiling, and quite frankly, that's just provide the basis where people don't really care what the price is. They just want to keep buying it. So yeah, a great market to be following at the moment. Next up, let's look at the UK. Of course, the UK, we're quite used to seeing some pretty dour numbers out of the UK. But we saw a big 0.3% on the latest monthly GDP figure. So that's good. And part of that was actually driven by the bounce back that we saw in terms of car production after a cyber attack on Jaguar Land Rover in the previous month. So anyway, it's just finer details of it. But, things are sort of ticking along well enough. I mean, if you were to see a sharp decline in terms of inflation, weakness in terms of jobs market, you would think that the Bank of England might take a more proactive stance. And I've covered it a number of times here before, highlighting the fact that UK inflation does have the basis or the potential to see a sharp decline. In terms of base effects, it does signal that soon enough we could see a dramatic fall in terms of that headline number. Markets aren't necessarily sort of paying all too much attention to that, quite frankly, at the moment. But you can see unemployment expected to remain, sort of claimant count expected to be very similar. So not really too many fireworks expected on the jobs front. In terms of inflation, tick lower in terms of headline and core figures. The month-on-month figures expected to come in at 0.2, which is fine. Retail sales, we haven't really got projections here at the moment. Sort of rise in terms of manufacturing PMI, a rise in terms of services. So a move higher in terms of the PMI. So generally decent in terms of the state of the economy. And then when it comes to the inflation rate, it's sort of coming down sort of gradually. And you can see here exactly when inflation will come down in a pretty dramatic manner. And that is essentially by the sort of April, May time of this year, because April, we've got this massive jump in terms of monthly inflation. And when that drops out, well, you can expect to see headline inflation coming down in a pretty meaningful manner, headline and core, I should state. So that means probably waiting until May until we see the April figure removed. But you can see elevated numbers for February and March as well. So for the near term, maybe we don't see anything too impressive in terms of inflation. But I do think that we see a potential boost in terms of the prospect of lower interest rates before too long, certainly within sort of the back end of Q1 into Q2, where things really start to shake up in a meaningful manner. In terms of the prospect for action from the Bank of England, we can see here that ultimately market expectations point towards action coming into play at the sort of time where I'm sort of signaling that inflation is really going to come down in a meaningful manner, sort of more like April, June kind of time. Not too much for the near term. In terms of, the market to watch, it's really got to be the FTSE, right? We took the 10K mark and now we're just moving higher. I mean, ultimately, everything that's happening over in the US at the moment, they appear hell bent on sort of breaking relations with friend and foe alike right now. So people are sort of questioning whether it's the place to be. And certainly with the fact that you've got Donald Trump coming out with these sort of policies on almost a daily basis, which I think we're going to see more of, which essentially, if you're talking about saying, credit card providers can only cap interest rates at 10%. Institutional investors can't buy single family homes. Great. You're trying to win over the electorate and it's in a midterm year. So I understand it. I think we're going to see more of that. We're sort of favoring Main Street rather than Wall Street. Doesn't make for great conditions for people to be investing in companies, because at the drop of a hat, you can come up with a new rule that kind of hinders your company. So it does point towards the need to diversify. And you can see that we've been seeing some nice strength in terms of the FTSE 100 of late. The construct of the FTSE also is beneficial for the bulls at the moment, because you've got the financials, which are doing relatively well, but then you've also got, in particular, the likes of the commodity names. So, of course, we've been seeing strength actually recently for oil, but also, of course, the likes of Fresnillo and some of the precious metals. Also, we're seeing copper hitting record highs. So the miners, the oil and gas names starting to move towards the upside. The defense stocks like BAE Systems and Rolls-Royce, I think it's a good index to be looking at the moment. So, we've run higher at the moment. Maybe we pull back a little bit back into trendline support, but as you can see here, we do sort of pull back and then move higher, pull back, move higher. That trend looks pretty nice to me. So I'm expecting more of the same. And in particular, if we see a decent decline in terms of inflation, that will provide the basis for people to start to feel a little bit more confident soon enough of a looser monetary policy stance from the Bank of England, albeit, like I said, it might actually take a little bit of time for markets to realize that is the case because, like I said, that headline CPI figure is going to drop pretty dramatically in my mind at the back end of Q1 and the beginning of Q2. And finally, we have, there we go, Japan. So we've got the inflation rate coming out, currently 2.9 and then 3% on the core. Then we've got the PMI numbers coming on Friday and the interest rate decision from the Bank of Japan. Now, an interesting time to be trading the Japanese yen. There's a number of different factors coming into play, but Takaichi, she's in the position. She has great support. She's hitting very strong numbers in the sort of popularity polls. And so it looks like she could be doing exactly what her predecessor did, which is call a snap election. Now, bear in mind, her predecessor did it because he wanted to push through a more conservative fiscal budget that he perhaps didn't have enough support for. So he needed to prove, I have enough support, I need people to back it. And so we'll go to the polls and see what people are saying. Well, what do people say when it comes to fiscal conservatism? Less spending, higher taxes. People say, no, thank you, we'll have someone else. Well, they did get someone else in, and she's come in on the opposite ticket, which is expansive spending packages. And so if she did call an election, she'll most likely win. She'll probably shore up the lower house, which emboldens those expecting to see significant fiscal expansion from Japan. But then the flip side of it is that we're expecting to see rate hikes from the Bank of Japan. So do we see that? Well, look, markets aren't necessarily pricing it for this time around. You can see that inflation sort of moving lower at the moment. So that's certainly going to be one of the key elements coming into play because inflation has been elevated in Japan. That has been a core reason for the Bank of Japan to feel the need to act. At the same time, we're seeing that weakness in terms of the Japanese yen. So they're trying to sort of stem that decline as well. In terms of rates, you can see here, markets are pricing in the next rate hike around, where are we? June time. I did just see something saying the next Bank of Japan governors or members expecting the possibility of a move in April. So April's the sort of coin toss. So 58 to 42 in terms of expectations. So that's where the movement's going to happen. If we start to think things are more likely to sort of move over the near term, then you see a shift in terms of pricing around the April meeting in all likeliness. In terms of the markets, well, let's just jump onto the chart for dollar yen quickly to round things up. Of course, like I said, it's been gaining ground of late. And in particular, once we saw the announcement that we could see a snap election or the rumors of a snap election, we managed to breach through this 158 kind of area and hit the highest level since I think it was July 2024. Right, there you go. Yeah. So July 2024, pulling back a little bit since then. So do we sort of we've sort of run away from ourselves. Do we come into some sort of retracement area here alongside sort of trendline support? Do we come into a sort of deeper pullback, that kind of area? That looks quite interesting if you sort of see an ABC style retracement into here and then the bulls potentially coming back into play. Possibly. But bear in mind, this is an area that sort of resistance has held up in the past. And generally, this is pretty lofty, the kind of area where you could see FX intervention coming into play from the Japanese. So an interesting one to follow, especially because we've got inflation and then we've got the BOJ interest rate decision. Not much movement expected, but if we do see a more hawkish stance, we could see that deeper pullback coming into play for dollar yen. I hope that's been useful. Like I said, I mean, look, we're talking about some of the economic events that are going to be coming out for the week ahead. We've also got the corporate calendar worth watching out for with earnings season underway. TSMC numbers were impressive, so that has provided a boost for those looking into the tech names, the AI space. And of course, we had a big theme around the banks. But also we've got so many other things happening. Thanks to Donald Trump. I knew when he was coming back into the White House, it was going to make my job interesting. Well, he certainly delivered on that, even more so than his first tenure in the White House. It's pretty crazy, everything that's happening, but certainly interesting for traders. Hope this has been useful. Make sure to like, subscribe, and follow for more. My name's Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day and a great week ahead.